Welcome to FT On Air from the Financial Times in London. I'm Martin Arnold, the FT's banking editor. If 2017 has been the year of Bitcoin in financial markets, I wonder what 2018 will bring. Joining me now to discuss the outlook for cryptocurrencies and other issues in the fintech industry is Daniel Aranda, Managing Director for Europe at Ripple, the blockchain-based cross-border payments company. Please share your comments and questions on our Facebook page, and I will try and put as many as possible to Danny. So thank you very much for joining us, Danny.
Thank you for having me, Martin.
And it's great to have you here for this monthly series of fintech video interviews that we're doing. And I'm particularly keen to hear both about Ripple, but also about the outlook for cross-border payments, the whole industry, and of which you're part, and also cryptocurrencies. It's been a very exciting year, as I mentioned in the introduction. But let's start.
We're excited to get into it, yeah.
Yeah, absolutely. Now, with the rise in prices that we've seen of some cryptocurrencies, I bet you're excited. Can we start with Ripple? Just explain, how does Ripple work? You do cross-border payments, but you're using the blockchain. So, I mean, start from first principles. How does the blockchain come into cross-border payments? How do you make that work?
Sure. So Ripple is a cross-border payment network, and the members of the network are financial institutions. So we work with banks as well as some non-bank financial institutions, and they use Ripple as a way to move funds around the world to other financial institutions. And where the blockchain portion comes in is really helping coordinate things like settlement, right? So when a debit occurs to the account of a sender, it's coordinated and synchronized with the credit that occurs to the account of a receiver. And we're also deploying digital assets, cryptocurrencies, towards liquidity management as well. So really trying to build a next generation network in terms of how people can move funds around the world to service new kinds of demands that we're seeing from the market.
So the blockchain part of it, it deals with the settlement issue around making a cross-border payment. Is that right? I mean, just talk through the technology of how that works. Is it a question of, because blockchain is a shared database essentially that is protected by cryptography. So how do you use that technology to solve the problems, and what problem are you trying to solve in cross-border payments?
Sure. I think maybe to address first what problems are we trying to solve, and then into the kind of core mechanics of it. The number one problem we're trying to solve is issues around moving money globally for both retail consumers as well as for corporates. What kind of pain points are they experiencing? How does the experience lack in terms of the experience that maybe they want or are looking for compared to what they get in other services? So a good example is, if I send you an email or a text message, I expect you to receive it immediately. But if I were to send a payment from my account here in the UK to my mother over in the US, it would take about 2 to 3 days for that payment to process. And I think that's largely because of the internet. Like, the internet has really reset my expectations for how services are supposed to work. Also, like, if I send you a package, say you're in Brazil and I send you a FedEx package, I'm going to be able to track that online and actually have complete visibility in terms of where the package lies along that process until it's actually delivered and received by you. When I send funds around the world, I don't have that kind of visibility. There's a famous example going around now that you can use an app to track how your Domino's pizza is delivered to your house. But again, when you're sending money internationally, you don't get that kind of visibility. So these are core issues. Not even with single financial services providers. So this isn't necessarily the fault of a bank like Barclays or HSBC. It's really the entire infrastructure they're using between them. And this is really what Ripple is trying to solve by building a new kind of network, a new way for financial institutions to communicate with each other. And I think the experience that we're trying to deliver are things that you expect from just dealing natively online. You want things to be instant, very transparent, and also at a lower cost.
So cheaper, quicker, and more transparent.
Cheaper, better, faster, always.
And how does the cryptocurrency, because Ripple has its own cryptocurrency, which is called XRP, how is that used in this process? Are people, for instance, sending money from the UK to the US, are they converting their pounds into XRP and then selling the XRP into dollars in the US? Is that how it works, broadly speaking, or am I oversimplifying?
No. That's roughly how it works. A couple of things to mention. So when banks use Ripple, right, they can use it for financial messaging between each other. Right? That is one capability they are leveraging of the technology. And that is a capability that competes with things like SWIFT, right? Yeah. Just a better way to communicate a payment message between two institutions. The second piece that they're using it for is just synchronizing their core ledger systems when they do a payment with the core ledger system of the receiving bank. So that removes settlement risk, and settlement risk is a big problem for a lot of financial institutions, especially when they're doing large amounts of transactions. The third piece that they're using it for is liquidity management, and this is where we want to deploy digital assets and cryptocurrencies, meaning that if I am Santander here in the UK, who's a client of ours, and I'm sending to Singapore, to let's say Standard Chartered in Singapore is also on Ripple, if we're going to do a cross-border payment, there has to be Singapore dollars on the other side, right? You have to make that liquidity available in the receiving currency, and we think cryptocurrencies and digital assets are going to be a great way to actually fund that liquidity. Today, your typical treasury manager at a bank or at a corporate will pre-fund accounts around the world.
The so-called Nostro Vostro accounts.
Yeah, they'll pre-fund their Nostro Vostro accounts. They'll tie up all kinds of liquidity around the world. We've talked to multiple different corporations, one large cap one in Japan, who had much as $5 billion just sitting in accounts around the world in order to service their various payments. If you're able just to do payments on demand in real time, you could free up all that capital to invest back in your business. And that could be good for the businesses that use these services and ultimately generate more demand for the banks who offer the service as well.
Okay, I get it. Now, there are lots of questions coming in from our viewers about cryptocurrencies in general. I mean, I'd like to just ask you about how you, at Ripple, how you see XRP and its rise in value and how that might be useful for you, because a key challenge for Ripple is to get more customers using your technology so that you get the scale in order to be able to challenge for this market for cross-border payments.
Absolutely. Ripple is a network business. We're beholden to network effects. Getting that flywheel going, getting the network effect going is a key part of what we're trying to do, what's going to make our business really successful in the long term. We're very fortunate even as a blockchain company, right? We have over 100 partners and clients that are actually using our technology. 75 of those are actually moving into production, so it's beyond any kind of proof of concept or pilot stage. And that's really important to kind of get things started. Now, 100 partners is still not all the financial institutions in the world, right? But starting somewhere is really important. And so we're always very cognizant of the use cases that our partners do to deploy this and making sure those use cases have a way to be able to extend into other areas for the long term and making sure that we're building a sustainable network over time.
And you can use, or you can envisage using XRP and the valuation, which I think is somewhere north of $15 billion in if you were to convert it at current market rates. You could use some of that currency that you're sitting on, and that's just Ripple's share of the XRP, I think, that you have as sort of treasury stock, if you like. You could use some of that to incentivize financial institutions to use your technology.
Yeah, I think a core operating principle of Ripple as a company is being focused and really making sure we solve one customer problem.
Yeah.
And we are very focused and dedicated. It's our number one priority to solve cross-border payments. And that is true for the way that we deploy XRP as a digital asset as well. I think particularly in the blockchain space, there is a tendency to talk about blockchain as a panacea, as a way to solve all of the world's problems, including world hunger. And we think remaining focused is what's going to help blockchain technologies come out of this area where it still is today. Even though there's a lot of money going into different cryptocurrencies and digital assets, we really want to see it in a place where it has a real functional economic use case, where it's being used in production, where there are happy clients that are getting real economic value out of it. So XRP, we focus on cross-border payments as well. We want XRP to be the best digital asset to fund your accounts and move liquidity around the world.
I've got a couple of questions that I think are relevant to what we've just been talking about. Tracy Rebello asks about the time that banks take to do cross-border payments. You mentioned, 3 days some banks can take to transfer money. She says they must be making money on that over the 3 days. How will crypto companies like yourselves make money if you're doing it much faster?
It's a really good question. I think it's always incredibly important to bear in mind your customer's business model and how are you going to help your customer make effectively more money. I think if you look at the banks and you look at where they've been over the past, say, 10 years, they spent those first few years coming out of the financial crisis and making sure they were solvent.
Yeah.
They spent the next couple of years investing in adhering to new regulatory and compliance regimes. It wasn't until a few years ago that growth started to become a priority for these banks. So shareholders saying like, hey, where's the growth in my equity share in this corporation? And I think that compelled the banks to begin to look at new technologies as a way to innovate new services that they could generate new kinds of revenue out of and gain new kinds of clients. So that is definitely a part that we speak to with the bank, where if they can offer a new service, instant global payments with full visibility and traceability in terms of how it's going to be processed, that is a new service to corporate customers. That could be an entirely new line of business for the bank, where they could gain new clients or gain greater share of existing clients than they could before, and that can be better for their overall business health.
And you make money out of that by taking a cut of each transaction that you process?
That's a good question as well.
Yeah.
I mean, we're a software company, so we have like the banks are our clients. We're a vendor to the banks, so we charge them a software license. We charge them integration fees to actually get the software up and running. These are the kind of fees that we apply to make our own business model sustainable as well.
Right. Okay. There's been a lot of discussion about Bitcoin and cryptocurrencies generally, and Bitcoin going up above $10,000, above $11,000 now, and whether it is a bubble and whether it is all linked to nefarious interests, and whether this is, the black economy, whether it's fraud. Jamie Dimon famously, said it's all a fraud, Bitcoin. What do you think do you think this is a genuine game-changing moment for the financial sector, for the rise of cryptocurrencies, that we're going to see complete transformation of the industry, or is this just a symptom of very low interest rates and people speculating on whatever seems to be the latest fad?
I think there are always confounding factors in any larger trend. So I think when you look at the tech sector in general, lower interest rates, I think, do come into play. But the truth is still, the internet and services like Google and Facebook, I mean, these have changed a lot of our day-to-day lives. That is still secular from interest rates. And I think the same is true for digital assets, cryptocurrencies, and blockchain as well. Make no mistake about it, like we truly believe that this is the internet moment for financial services. Like it's nothing short of that. And when I was referring to before, we think a lot of customer expectations and behaviors are being informed by the internet. Our answer to that is to essentially bring in internet-like infrastructure for the way that money moves between financial institutions around the world. And we mean that in a very literal way. Like, the internet is a collection of servers that operates off of common protocols to be able to communicate. The network that we're building is very similar, and the network that the blockchain industry is building is very similar in its topography. There are some key differences, but we really believe this kind of infrastructure is going to change the way that financial services is rendered. In terms of the valuations that we're seeing and the price of Bitcoin and those things, I think our company as well really believes that, listen, it's really hard to say what's going to happen over a 3 to 6 month period, right? I can't tell you if Bitcoin's going to go up or down. I don't have a
Jonathan Flight would like to know, should I put all my savings into Bitcoin? Is it safe or not?
Jonathan, you should make your own economic decisions. I am not a financial advisor. You should not take that advice from me. But I think despite what it'll do over a 3 to 6 month period, I think when we look at 3 to 6 years, like we're very, very bullish on the outlook. We think these digital assets are going to be a fundamental part of the way that financial services are rendered, that they're going to deliver a lot of value, but it will take time.
Yeah.
The ecosystem around these things takes time to build. The kinds of services, even for developers, the different frameworks and open source projects that are able to leverage in order to build new applications, those take time to develop. And an often used analogy is that we're essentially in, if the time frame for blockchains, the life cycle of blockchains is a clock, we're essentially in the first 5 seconds. We're in very, very early days of this. And I think we as a company, Ripple, we look at ourselves as being one small piece of how blockchain will get deployed in financial services, again, by focusing on a really specific insertion point of cross-border payments.
Okay, drilling down into Ripple, I've got quite a specific question from Ru Chang, who would like to know, can an individual have an account with Ripple to move money around, or is it just large financial services institutions that can get accounts with you?
I think in keeping with that principle of focus, we've decided to focus on the financial institutions, and there's a very specific reason why. Take email, right? There is a protocol belying email, SMTP, but for a typical user to set up their own email server, develop their own client for that email server and begin sending email, that's a lot of work. I'd rather just go to Gmail and start sending messages over to Martin's account over at the FT. And we think this is going to play out relatively similarly in financial services. So you could still go open up your own account directly on a blockchain like the XRP ledger or the Bitcoin blockchain. But we think most people are going to want to access these kinds of assets and these kinds of technologies through a service provider who will be a financial institution providing that on and off ramp.
Yeah. Okay. I mean, can I just ask a question about your business model is based on selling your software to financial institutions, predominantly the big banks, and your main competitor, the company that you seem to be gunning for, is SWIFT, which is the interbank payments messaging system that was set up by the big banks and is owned by the big banks. And at the same time, the big banks also have all set up R3, which is a consortium-owned company that is developing all kinds of blockchain applications based on a competing system, some of which involve cross-border payments. So I could go on and list all the different things that banks are doing and all the plethora of different blockchain consortium and projects that are out there. How does that work when you're competing with the same people you're trying to sell to?
It's a good question. I mean, specifically on Swift, again, we tried to keep our heads low and focus on solving the customer's problem, right? And a lot of other issues get resolved when you do that. If you deliver a better service than Swift, the banks are going to choose you over Swift, and all the politics, if they're able to serve their customers in a better way, largely get left at the wayside. I think also, as well, a lot of the banks want a new kind of service. They want to be able to offer their customers something new. I think a lot of today's infrastructure, including Swift, was really built for a different kind of customer in mind. I usually think of like a 1970s corporation who would produce a file at the end of the day, rubber stamp it, push it out to their bank, and all of a sudden $50 million moved around the world to pay all their vendors.
Right.
And I think now corporations are acting very differently. Take a digital marketplace, something like eBay or Amazon.
Airbnb.
Yeah, Airbnb. You have to move $2 from a bank account over in the U.S. to the mobile phone account of someone in India, and it has to happen in real time, and that's mission critical to that marketplace. That's a very different kind of transaction that we hadn't really had that kind of need before, say 15 or 20 years ago. And again, it's really being driven, pushed by the internet. So I think when we start to talk about disruption, changes in the industry, it's actually not coming from technologies like blockchain.
Yeah.
The technologies, blockchain, these are enablers to help the change happen, but really the push for change is going to come from the customers. It's going to come from the marketplace. People want new services. Companies like Airbnb have huge problems around being able to connect their different hosts and guests and effectively be able to make these payments happen.
Can I ask about security? Yuri Polyakov, another of our viewers today, asks how secure is XRP? And security and cybersecurity particularly is such a massive issue, particularly when it comes to moving money around the world. Is blockchain inherently more secure than other alternative technology or the systems that it's aiming to replace?
Well, one way to think of security around blockchains is you can go look up how much value is in these systems today, right? So, over 300 billion in market cap across all these digital currencies. That's essentially a bounty out to hackers to say, hey, if you can hack this system, some portion of that money is yours. And that's a very, very large bounty that hasn't been broken yet. I think a key part of security, though, around this is on the edges. So if a financial institution is plugging into, say, the Bitcoin blockchain or the XRP ledger, how secure is their API connection? Could that be tampered with? And that's something we absolutely spend a lot of time on with our partners to ensure that they're taking on best practices to make sure that their clients' funds are safe.
Okay. I'm afraid we are out of time, Danny. That went incredibly quickly, and I enjoyed it hugely. So thank you very much for joining us.
Absolutely.
And please join us next month for the next installment. Goodbye.
Thank you for having me.